Only a few minutes left before the trade ends and before tomorrow's jobs report. Economists are expecting the U.S. added about 202,000 jobs in April. How can we expect markets to react if that number comes in unexpectedly higher, lower? How do you play it? Let's bring in Mark Luschini. He has more than $60 billion in assets over at Janney Montgomery Scott. First of all, what are you expecting for the number tomorrow?
Liz, I actually think we're going to come in maybe just a little light against that consensus figure. And the setup for it comes by way of the ADP report that came out in the middle of this week that reported a number that was below expectations. We've seen a little bit of creep in the initial jobless claims over the last 4 or 5 weeks. And I think together it suggests perhaps a little softening in those numbers, but nonetheless still a number that's enough to hold unemployment steady, but also might be a Goldilocks number for the markets.
Well, are you buying right now? Because it looks like the markets are on edge of their seat, waiting to see what this number is tomorrow. But beyond that, possible June rate hike, although you did have the St. Louis Fed chief Bullard saying, you know what, he's not sold on a June rate hike right now.
I think the same. I think it's unlikely that we see a rate hike in June, although what I do think we see in June accompanying the Federal Reserve meeting is perhaps some hawkish comments that come out following the meeting to set the markets up for a September rate hike. But needless to say, we're still investing in advance of tomorrow's jobs report and as well the Fed meeting in June. The fact of the matter is there's reasonable opportunities in the market today. You just have to be careful in terms of what sectors I think you're investing in.
Right.
We prefer some of the more defensive areas like healthcare, even consumer staples selectively, and avoiding some of those that have led this rebound rally since mid-February.
Yeah, you do like among your names, you've got Pfizer, and you do like, which is pretty cheap PE here of 13, and you've got an iShares home builder ETF, but keeping it broad here with just about 30 seconds left, are you buying on any market dips you see right now, Mark?
We are, Liz. The fact is we think that the fundamental underpinnings for the U.S. economy are reasonably good. We're going to continue to see positive economic growth, and that should provide a fertile climate for corporate profit growth in the back half of this year. And as a consequence, I think equities will resume their advance.
Great to see you, Mark. Thank you so much for joining us.
Thank you, Liz.